Have you ever wondered if your bank account is quietly draining your wealth while you think it's keeping your money safe? Today, I'm putting my own finances under the microscope to find out if I'm unknowingly losing money, and how you might be too. If you're like most people, your money probably sits in a regular bank account earning almost no interest. You might think, it's fine, at least my money's safe. But the truth is, when your savings aren't growing, they're actually shrinking in value. That so-called safe place might be costing you more than you realize. The cost of living keeps rising, but if your money isn't keeping pace, you're losing purchasing power without even spending a cent. It might look stable on paper, but over time, inflation eats away at what your cash can buy. It's like watching your money quietly fade in value year after year. So what's really happening when you leave your money in a traditional bank account? Low interest rates mean your earnings are minimal. Inflation silently erodes your savings, and then come the endless fees. Maintenance charges, overdraft penalties, ATM costs. They may look small individually, but together they can take a noticeable bite out of your balance. Low interest rates are one of the biggest culprits. Think about it. You're lending your money to the bank, yet they're paying you just a fraction of what they earn from lending it out. It's almost like they're renting your money at a discount, and you're the one settling for less. Inflation, on the other hand, is a silent wealth thief. As prices climb, the same dollar buys fewer goods and services. Even if you're not touching your savings, they're still losing value. It's like your money is standing still while everything around it keeps getting more expensive. And then there are the hidden bank fees. They seem small, just a few dollars here and there, but over time, they pile up. Maintenance fees, ATM charges, overdraft penalties, all these little deductions quietly chip away at what you've worked hard to save. What many people don't realize is that banks are using your money to make more money. They lend out your deposits at much higher interest rates and pocket the difference. It's a brilliant model for them, but not exactly a fair deal for you. Here's where the good news comes in. There are better ways to make your money work. High-yield savings accounts, for instance, offer much better interest rates than the traditional ones. The difference might seem small at first, but over time, that extra growth can really add up. If you're comfortable taking on a bit more risk, investment platforms can be another smart move. By putting your money into stocks, bonds, or ETFs, you give it a chance to grow beyond what any standard account can offer. Of course, you'll need to do your research, but the long-term rewards can be worth it. Certificates of deposit, or CDs, are another option. They offer a fixed interest rate for a set period. You'll need to keep your money locked in, but they're low risk and can be a solid middle ground between savings and investing. I know someone who made a smart move that really paid off. She switched from her old bank account to a high-yield savings account and immediately started earning more. Over time, that extra interest became a meaningful amount of money, and she didn't have to do anything risky to get there. She's not alone. Many people are realizing they don't have to settle for low returns and hidden fees. With just a little research and a few smart decisions, they're building stronger financial foundations and watching their money actually grow. Here's something else to consider. Your financial habits today directly shape your future freedom. By learning where your money sits and how it works, you take back control from banks that profit off your inaction. It's also worth looking into budgeting apps or online tools that help you track your money more effectively. They can show exactly where your funds are going and highlight areas where you can earn or save more. Don't underestimate the power of compounding either. Even small increases in your interest rate can make a big difference over time. Every extra percent you earn helps protect your money from inflation and keeps you one step ahead. Building financial awareness doesn't have to be complicated. It starts with asking the right questions. Where is my money? What is it doing? And how can it do more? Just by taking this small step, you're already ahead of most people who never question their banking choices. If you want to take it a step further, start comparing rates from different banks, and digital financial platforms. Many online banks offer higher returns because they have lower operating costs. That means more of the profit goes straight to you instead of to the bank's expenses. Another smart habit is to schedule regular money check-ins, maybe once a month. Review your accounts, check your spending, and make sure your savings are actually growing. It's a simple habit that builds long-term financial confidence. Also, consider diversifying where you keep your money. Instead of having everything in one account, spread it across a few safe but higher yield options. This reduces your risk and gives your money multiple opportunities to grow. Finally, remind yourself that financial progress doesn't happen overnight. It's about consistent small steps, earning a little more interest here, cutting a few fees there, and staying mindful about where your money goes. Over time, those small steps lead to real financial freedom. The takeaway is simple. Keeping your money in a traditional bank account might feel safe, but it's not helping you grow. There are better options that let your money work for you instead of against you. So take a closer look at your finances, explore alternatives, and make your money start earning for you, not just sitting there doing nothing. Thanks for watching. Let me know in the comments how you remanaging your savings and whether you've tried switching to a better financial option. And if you found this helpful, check out my other videos for more simple, practical money tips.